Hi everybody, it's Christian from Serene Education. I'm just going to be going over the following week's Forex analysis for the majors for the second week of November the 9th to the 14th. Starting with Euro against US dollar on a weekly, let's have a look and see what's happened the past week. And if you look at the hard right edge, you'll notice that we've seen the first week of November showing a bit of selling pressure. Well, most of October, in fact. So you take the 4 weeks, these are weekly candles, so we look at 1, 2, 3, 4, the whole of October. In fact, after a very negative September, we saw October actually consolidating at around a weekly fib level here at the 23.6, and that is roughly around the 124,897 and change. So that level here has been a support level through most of October. So it was imperative, if we were still to see euro selling pressure, then we would need to see that weekly fib level here, the support level, the October support level, being breached. And we saw the start of the week, November, actually trading slightly higher. And then as we headed into the week, we saw a bit of negativity. However, by the end of the week, we saw price pulling back slightly after mixed results on the non-farm payroll figures. And subsequently, that close is still, however, lower than the weekly support level here at 124,897 and change. So my emphasis on where I should be looking for this particular week is for the weekly fib level here, this horizontal red line over here, to now be what was my prior support, to now be this week coming up my new resistance. Okay, so if we drop down to the daily, there we go. You can see this nice morning star here through October. We saw a bit of a pullback, heading back towards the weekly fib level, and now reverting back down towards the weekly fib and closing lower on Friday, on Thursday, in fact. Pullback on Friday. So breakout on Thursday, the pullback on Friday. Now we need to see a continuation, if anything, ideally, because we've broken through a weekly fib level. So 124,897 needs to remain above price as a major resistance, and then look for selling pressure on euro against US dollar in the direction of the long-term trend, which is foreseeable to the downside. You can see our indicator box over here, primarily in the monthly, weekly, and daily, and the 4-hour to a degree, telling me that the long-term sentiment is generally looking negative, and the R squared is complementing that negativity. So as long as that 124,897 or the weekly fib level remains above price, it is now resisting price. Swing low is forged from Tuesday, Wednesday, Thursday onwards. A new swing low is forged. You can see the RMO very much below the zero level. Our OSMO below the zero level. Yes, it is dark red, primarily because we've had a pullback on some mixed results on non-farm payroll, but it's still below a prior major support and resistance level. Therefore, the negativity is still in favor. So as long as maintained below that 124,897 for this week, look for selling pressure to the downside. Moving on to sterling. Let's have a look at this particular week. Let's look at this particular data on the weekly. We've seen a lot of consolidation, as we've seen on euro over the last week, the last month. In fact, October was consolidative, and there was no difference over here as well on this particular pair. Let me just get rid of these two white lines. Get rid of that. Thank you. There we go. So you can see that price moving lower through the latter part of this year, in fact. And you can see the institution moving average, which happened to be above the 50% retracement on the weekly time frame here at 1600, nice round psychological number, or acting as a prior support level. However, going into the last week of October, we saw a bearish engulfing candle. That took us through that level. However, still not making any lows, as price was still consolidative above the level. So we want to see a nice bearish candle close lower. And last week's data has given us exactly that. It is now closed nice bearish below the weekly fib level here at 1600. We should now be looking at our 38.2 at the 157.7213 in change mark as our next particular target, as that was a price support and resistance level in the past through 2013, in fact. So looking down towards my daily 4-hour, etc., you can see here on the indicator bar, primarily red on our long-term sentiment, monthly, weekly, daily, and 4-hour all looking negative, and the R squared is complementing that. We should be looking for further selling pressure on sterling for a very strong US dollar. So let's look down towards the daily. You can see the weekly is clearly above. You can see a nice bearish engulfing counter on the Thursday. We had a slight pullback on the Friday after a mixed result on the non-farm payroll figures. And you'll still notice that price is still below the monthly fib level. Sorry, the weekly fib level here at the 1600 level. And as long as price is making swing lows, then the actual trend is still very much to the downside. Therefore, we should be looking for selling pressure for this particular pair. And we should be heading or looking towards that 157,213 and change level. And where price is trading right now to the level, you're looking in excess of 140 odd pips. You're not going to get all of it. However, there's more than enough over there to capitalize on if we see further selling pressure coming through for the second week of November. So look for further selling opportunities for this particular pair for the coming week. Moving on to the US dollar Swiss franc. Ideally, if your euro US dollar is moving lower, therefore we should see a very strong US dollar pushing the Swiss franc higher. Okay, so US dollar strength moving higher, which means resulting in Swiss franc negativity. So US dollar moving high on the US dollar Swiss franc on the weekly. You can see a slight consolidation through October, which is exactly what we've seen through euro against US dollar and the sterling against US dollar. Consolidation, and you'll notice that the week ended up as a spinning top. Okay, clearly the bulls and the bears are fighting with each other. There's no clear direction at the moment now. The long-term sentiment, my monthly, weekly, daily, is telling me I should be looking long, and you can quite clearly see everything is looking high. We have swing highs, prices moving higher. You'll notice, however, that we haven't made any new highs on the weekly time frame. In fact, we're actually trading within a consolidated zone. Apologies for that. Between the 76.4 level here, 97,355. Okay, so ideally going into this week, the second week of November, we'd ideally like to see the current Friday high being breached here at 97,355 onwards. If we get above that level, then we could be looking towards the weekly fib above us, around about the 99788 and change level, which is approximately 230 odd pips to that level. You're not going to get all of that there again, because obviously we need a breakout, a nice genuine bull candle upside, and then, but there's more. What it tells me that there's more than enough on this particular trade if and when I do get my setup telling me I should be looking for buying opportunities. So here on the daily, if we just move down to the daily, there we go. I get a bar signal, primarily because we have the blue arrow candles are still blue, Orimo is still above, Osmo is above. The only thing we don't have in our favor is, you can quite clearly see on the daily, Thursday bull candle moving higher than the prior resistance level higher that we saw at the start of October. After some very indifferent non-farm payroll figures, we've seen a drastic pullback, and what we saw was a bearish close on the Friday session. So the overall sentiment is still one of upside. However, after US dollar non-farm payroll, very uncertain figures coming out, that's seen a slight pullback. Price, as long as you can maintain these levels, we are ideally looking for further strength for the US dollar going through the coming week. If, however, we do not see 97355, the current resistance level higher, which is a monthly fib level high, being breached, then we could see further consolidation. And if we don't see any bias for the US dollar strength coming through this week, we could see a longer consolidation with a potential for price then to pull back sharply towards that 78.6 level. So if we don't, well, what we want to see this new week is obviously new highs, because remember, in an uptrend you want to see swing highs. If she's not making swing highs, then there's obviously some sort of hesitation in the market. If there's hesitation in the market, then we're going to see indecision on our candlesticks, which leads to uncertainty, which means we're going to see consolidation. And if that happens for too long a period, then we see a change in market sentiment, and we could see new lows being posted. So US dollar Swiss franc, ideally we do need to see the Thursday high being breached at 97355, which is a monthly fib level resistance level high. If we don't see that going forward, guys, expect to see further consolidation with a potential change in market sentiment and a possible return towards that 78.6 level here at 94877. Between these 2 points, where price is trading right now to that support level low at the bottom, we're looking at excess of 163 pips. So within that consolidation range, there is more than enough. Ideally, you don't want to be trading the consolidated range, because there's obviously a lot more speculation, a lot of more hesitation. We don't want to be trading it, because obviously that's going to add more risk to your money management. It's entirely up to you whether you choose to do so or not. I'm telling you that there is too much hesitation at the moment now. That's entirely up to you to decide. Okay, so looking at the last pair of the week's analysis is the US dollar Japanese yen. So with the US dollar strength, we should see a weak yen, so we should see a rally for the US dollar Japanese yen on our chart, and sure enough we have that on our weekly here. You can quite clearly see price has been in a very, very bull market. The US dollar against a weak yen has been very, very positive since the latter part of 2012, in fact, and we've seen a lot of movement near term after a lot of consolidation through the earlier parts of 2014, in fact. But however, all that patience has paid off, and we've seen an extension to the upside. In fact, the week, this prior last week, has actually seen price closing higher than the monthly fib over here at 23.6 at 112604. So therefore, going forward, we should be aiming towards the zero level, which is at 124048 mark, which is approximately just short of 960 odd pips. So there's a lot of potential trading profit on this particular pair as long as price maintains above the 23.6 level here at 11260. So looking towards this week, in fact, for the US dollar Japanese yen, I'd like to see price maintain, just going towards my daily. You can see I get a buy signal straight away, primarily because if I just pan here so I can show you the actual sentiment on the chart, you can see I've still got a blue arrow, candlesticks are still blue, RMO is still above the zero, and Massimo is clearly above the zero. However, it is dark green, and primarily dark green because of the uncertainty we saw on the daily close on Friday after mixed results on the non-farm payroll. So ideally what we want to see is the Friday high or the Thursday high. You can see price actually tested the Thursday high and failed to close above it. So on the daily, price is not making any new highs, and as I mentioned to you, price is obviously, if you're in an uptrend or a strong uptrend, you want to see price making new highs, and vice versa. If you're in a negative trend, you want to see price making new lows. Here in this case, US dollar Japanese yen is bullish. Okay, we're trading above a monthly fib level. We have seen a lot of momentum through the past week moving higher, so therefore if we're going into a new week and we want to see new strength or trade in the upside direction of this particular trend, we need to see price making new highs. So therefore we want to see a physical close above 115548 and change to give us an entry, and then we could head towards or look towards our long-term target going into the latter part of November or through November going into December. We look at 124048 as our long-term, as our potential target level to the upside. As long as it trades above the 23.6, we should still be looking for that bias to the upside. That's it for the actual technical analysis for the four majors. Looking at the fundamentals, this week, Monday, very, very quiet. We do have a very important figure coming out for the Chinese market in terms of CPI year-on-year figure. They're expecting no change there, 1.6%. And in fact, if you look at the actual chart, we've seen the CPI year-on-year result actually dropping. So we're looking to, hopefully it'll stay strong at 1.6. If it drops to 1.5, and then look as a negative signal for the Chinese market. But looking further on through the week, Tuesday we have bank holidays, not only for the French market, but we also have a bank holiday for the Canadian and the US market. So in terms of liquidity, guys, both if you're trading Canadian dollar or if you're trading US dollar, therefore we're not going to see the market's going to be closed in the US, therefore we're not going to see any liquidity on the US session. So just be well aware that if you are trading going into Tuesday, you're not going to see a lot of liquidity on the market going into the latter part of the afternoon GMT wise. Wednesday we have a lot of data out for for sterling. In fact, we have the average earnings index 3 month on year, Claremont count change. We also have the Bank of England's Governor Carney speaking, which is important. We also have the Bank of England's inflation report, which is quite an important one for the for the UK market. So be well aware of that if you are trading sterling, or if you're in any positions in sterling, just be aware of the volatility or the speculation we might see going into Wednesday's data announcement. So Thursday we have industrial figures year on year for the Chinese market at 5:30 a.m. GMT, which is an important one. Everybody's looking at looking at China for the production might of the world. It has surpassed the US market in terms of production. So therefore we want to see a strong everybody, including the Asian section areas, will be looking at that particular figure, and hopefully it'll come out stronger. It has been growing we saw a slowdown through September. In fact, October's figure was a lot higher than the forecast, and they don't see a change in that forecast, and as long as it comes out 8% or 8.1, it's still going to be a lot stronger than the prior figure of 7.5, which is important for both Chinese growth as well as any Asian sector, as well as the Asian basin is both the Pacific Rim. It's vitally important. Thursday we have unemployment claims for the U.S. markets. The previous figure was 2,708 jobs unemployment was, and they're expecting a higher figure. So that's not really good for the U.S. market. We want to see obviously lower unemployment and more employment. So they're expecting, the prior figure was 2,780,000 unemployed people. They're expecting a rise of almost 4,000, from 278,000 to 282,000. So going in the wrong direction, which is not good for the US dollar. So look to see if you there again, if you are trading that particular day. Friday we also have the French prelim quarter GDP figures, and we also have the German prelim GDP quarter and quarter figures. So a lot of data out for Friday morning, and then we go into the Friday afternoon. For the end of week, we have the manufacturing sales month-to-month figures for the Canadian market for Luni, and then we finish off with core retail sales month-to-month figures for the US market, the retail sales month-to-month figures, which is important. We're going to be going into now December, Christmas session. So we're expecting, if the market's good, people are going to start spending money for Christmas. The production's going to get going. We should see that build up as we head into December. So very, very important data, guys. But otherwise, as mentioned on the technical side, just be well aware of the fundamentals that are driving the market, and just apply a very strong money management to those positions that you are trading, guys. Very, very important. You've got to have a strategy. You got to apply money management to that strategy. You've got to adhere to the rules of that particular strategy that you're trading, and just back it up with sound money management rules. Okay, so I'm going to leave you with that. Hope you have a fantastic trading day this week. Let's hope the momentum we've seen over the course of October going into November stays with us, and I hope you guys make a hell of a lot of pips going forward. But all I can say is I hope you have a fantastic week ahead, and trade serenely.